One of my clients said to me once, after that initial consultation with Gary, I felt like I was on overload.
Yes.
But I had warned them, if you give me 30 minutes to chop down a tree, I'm going to spend the first 15 minutes sharpening the axe. And so it's so that true. Upfront investment of time that really yields a good result at the end, rather than just jumping in and there's a snag or a problem. Hey everybody, this is Gary again with Yogi. He's the hardest working dog in real estate. I'm Nova Agent, your agent for life. We're back again with Amit, and thank you, Amit, for arranging this space.
Once again, thanks for helping organize this thing with me. My name is Amit Kaim with CMG Home Loans. I'm the regional sales manager here.
Let me ask you one quick question though. You say you're the regional sales manager. Does that mean you're only licensed in Northern Virginia?
No, I'm not. So, one of the things that I do is, obviously I help homeowners. I help people that are looking for refinancing and stuff, but I'm also helping to build out this region, right? So we're actually licensed. Personally, I'm licensed all the way from Ohio all the way down to state of Florida, right? So there are about 11 or so states that I'm licensed in. So people that are looking to purchase homes for their primary residence, second home, investment properties, I can assist them in all of these states.
So I can be their agent for life, and you can be their mortgage, their loan officer for life.
Absolutely.
All right. A lot of life going on here. Cool. Well, listen, I want to talk to you about questions that I normally get from people, and I want to make sure they get the right answer. Sure. That's why I'm turning to the experts here. You're an expert in lending. When someone picks up the phone and calls and says, hey, I want to apply for a loan, who might they be speaking to? Is that and what are those different roles, particularly the difference between the actual lender and the broker? Yeah, so like in our world, we're a direct lender, meaning that we actually process, underwrite, close, fund everything ourselves, right? So a direct lender is somebody who CMG Home Loan is. We have a lot of different programs that we have created, so we go through everything with our clients. We know what kind of program we have to put them into. If I have any questions, I just simply pick up my phone and call an underwriter just to clarify a few things. That always comes up. I've been in the business for almost 20 years, but I'm still learning every day, right? Every day a unique scenario is being given to me and I have to dig into it. But having the access to the resources we have, like the direct underwriters, the closers, the processors, helps us be more efficient. Now, there are other part of our business that people work in that are called mortgage brokers. They may have a similar settings up front when they're talking to clients as far as taking their information, talking to them about loan programs and stuff, but they don't really have access to direct underwriters because they don't know where they're going to place the loan. Okay, so a broker, for example, might have relationships with 4 or 5 direct lenders. The person sends in their information and then he sends it on to the direct lender. That is correct, because they're not delegated to underwrite loans, so they have to submit the loan to the designated lender, whoever they chose to. So sometimes that creates some lag in the process, and sometimes that creates more questions because you may ask the loan officer a direct question, but he may not have to answer because he's going to have to research and talk to the lender. And then get back to you. Correct. Let's talk about some of those things that you mentioned. First, the underwriters. Just what is an underwriter one person? Is it a committee? Is it a program? What's the underwriter? Yeah, so underwriter is basically an individual that is verifying that we have collected from day one, right? So just to give you a little process, right? So I take a loan application from an individual, I review everything, then I collect all the documents that I need, such as pay stubs, bank statements, W-2s. I have to verify everything up front. And then my team, that is comprised of my production manager and also my loan processor, she has to check everything that I've collected makes sense. Income is in line with what's reported on the application with W-2. The assets are in line with what's reported on the application, what are on the bank statements. Are the bank statements showing any kind of large deposits, right? So her job is to verify everything and put it together in order to give it to the underwriter. The underwriter is the final person that says, is this loan good to go, or do we need something else? So their job is to just basically vet everything else we have vetted. Okay. Right? Because at the end of the day, we're funding a loan. We want to make sure that there are not 1, 2, or 3 sets of eyes that are just re-verifying all that information.
And there are often times the loan goes into underwriting, we have no conditions because we have done everything we needed to do. There are times when the loan goes into underwriting and we may have missed that one page of the bank statement that we never got from the borrower. So they want to make sure that everything is there, so when the loan is closed, we don't go back to the client for asking for any unreasonable documents.
And the underwriter is deliberately separated from the client, so there's no bias.
Correct.
This is just the underwriter is only dealing with the facts.
Yes.
Is that correct?
That is correct. So the underwriter will never talk to the borrower. They will only talk to the loan team. So the borrowers would typically call me for any kind of information they need, questions and such they have, and then I communicate that with my team, and then my team talks to the underwriters. Now, if I have to pick up a phone and call my underwriter because I don't agree with something that they need, I absolutely do it all day long. Because we deal with a lot of programs. There are a lot of restrictions. There are a lot of guideline changes that happens on a daily basis. So I keep myself educated, but there are times when I may not know something and I need to call my underwriter. And there's a time when the underwriter is checking everything and they have not been refreshed on the updated guidelines. So, so the communication happens both ways. And that's a benefit of working with a direct lender, is that I can get instantly the answers that I need.
I don't mean to be disparaging to lenders at all, but one of the things I tell my clients is that the only thing I can guarantee you is that something's going to go wrong, because we have way too many people involved in this, most of whom you're not going to meet. So the underwriter and your actual team are people that they would never meet. Right. You are the face to the client, but you have a whole organization behind you that is making sure all of this works.
No, absolutely. For a typical loan transaction, clients deal with me directly, right? Then I have my production manager whose job is to make sure all the appraisal is ordered on time, title work is ordered on time. Are we meeting up all our contingencies, or are we lagging behind? Their job is to make sure that everything is moving smoothly. And then we have a loan processor, and their job is to make sure that all the guidelines that we have set forward for a loan program, that all the documents and such are in the file for the underwriter to review. Then you have an underwriter who approves the loan. When the loan is approved in underwriting, it goes into a closing department. Their job is to make sure they read up the contract, make sure all the seller credit is added, earnest deposit, any changes that may have happened while we went into the contract ratification, they're updated. So their closing document shows everything that needs to show. So after the loan closes, another segment of our product life cycle starts. Well, then the loan goes into a secondary market. It goes into people that are working in the secondary market that are hedging and securitizing everything.
I'm going to just take a look, try not to go too deep
Sure.
down this rabbit hole here, but after the 2008, the housing crash, the government ended up requiring lenders to buy back the loan because the paperwork was incomplete.
Yep.
And so I try to remind my clients of that the underwriter and the bank aren't being jerks. They're just trying to be perfect, because you don't want to get 3 years or 5 years down the road and have someone review this and then say, oh, there's a mistake, and now it's got to go back to the bank.
We are held to a higher standards now, especially given what happened back in 2007 and 2008. So the reason why we ask for all those documents and everything has to fit the box is because if the loan ever closes and it's ever audited, right, 3 years down the line, 4 years
Right.
down the line, and the investor, and I'm talking about like Fannie Mae, Freddie Mac, it could be any other investor that we may decide to sell the loan to, they could come back and say, well, this loan file wasn't accurately underwritten based on the Fannie Mae and Freddie Mac guidelines because you missed X, Y, and Z. Therefore, this loan is not insurable. We're not going to buy it. You have to buy the loan back. And who knows, you may have underwritten a loan at 2.5% interest rate. Now the going rates are 5.5% rate. So there's a lot of challenge, right? So you're trying to minimize risk by qualifying, verifying everything. Number one, you want to make sure that you're placing the borrower into the right mortgage product. So you're checking everything, income, credit, assets. Then you're also making sure that you're protecting your investment by doing the due diligence up front. So it's just the requirements that are set forward for us all to follow, and it doesn't change just from one bank to another. Everybody has similar set of guidelines.
Let's talk about that risk management in a particular way here, and that is the risk that are you lending the right amount of money? So we see, for example, the value of a home may be established by the local government as a tax value. You put it on the market and people agree this is what I will pay you for it. But then there's a third kind of value. We talk about the appraisal less about the appraiser's work and more about what it means to the bank and why the bank does that.
Great question. It comes up, especially in this market. People are always asking, should we waive our appraisal? Should we keep it? I always tell them, well, if you can keep it, because it protects your interest, right? But it also protects the interest for the bank, because the banks are lending the money to an individual, but they're using a collateral, which is the house. They want to make sure the collateral is priced right according to the sales comparison approach, right? So that's when we hire a third party, such as an appraiser. Who
Neutral, independent.
Yeah, neutral, independent, not biased.
So the appraiser doesn't work for the bank.
They don't
or
work
the
for
lender.
us, correct. So now with the new set of guidelines, the HVCC, the Home Value Code of Conduct, we have to order an appraisal through an AMC, the appraisal management company that has independent appraiser on their database. So they pay unbiased appraiser, they go and check the house. Their job is to simply look at the house, the condition, the contract, everything else, and then look at the sales that are happening around the area. So they come up with a value, and we want to make sure that our collateral is safe, right? So we're lending the money, but we also know that property values go up, they also go down. So that's the reason why we're doing an appraisal check, to make sure that it is in line with what we are lending against.
So let's go to that conventional loan, 20% down.
Sure.
What you're saying, let me get this straight. What you're saying to the customer is, I will lend you 80% of the value of this product, this home. You're going to put 20% down, right? But we need to know what that value is before I can do the 80%.
That is correct.
And we're going to turn to an independent party to make that determination.
Correct. So the banks will always use the lesser of two, the appraised value or the purchase price. So if the house appraises for more, but the purchase price is less, we're going to go off of the lesser of the two.
But that person walks away in that kind of a scenario with some immediate equity.
Absolutely. Happens in our area. Property values have gone up, and by the time somebody purchases a house, they may have $5,000, $10,000, or $15,000 in equity. And some cases have happened where the appraisal comes in a little short, where it may be $5,000 or $10,000 less. And if you have the appraisal clause in your contract, then it protects you as a buyer to go back to the seller and renegotiate the price.
Right, right. So that's also some of the risk management.
Yes.
Is the quality of the appraisal, and that comes in. The buyer pays for the appraisal,
That
not
is
the
correct.
seller, correct?
The buyer does.
So that is the buyer's property.
Correct.
And so the appraisal doesn't actually go to the seller. They just get told
Correct.
whether it's sufficient or not.
Correct. That is correct. So the buyer's paying for the cost. It's done for the bank because they're lending the money against the house. So we do share the appraisal report with the buyer when we do get it. So the buyer has a chance to review everything. And there are times when the buyer reviews everything and they come back and they say, well, you know what, the appraisal report doesn't really match with what the listing had shown. There were supposed to be 2.5 baths. Now it shows 2 baths. So the buyers have the chance to review and provide us the factual data that the appraiser may have missed. So it's it's a two-way process that we communicate with the buyers.
Okay.
We give them the opportunity to review it.
So let's talk about some other risk management.
Sure.
You talked about the bank statements, for example. Another thing that I try to mention a lot is, if you've got a 5-page statement
Yes.
and the 5th page is blank,
Yes.
does it matter if you get the 5th page? I've given you the 4 pages that have information. What's that going to do to the process?
Well, so again, the guidelines that are set forward with Fannie Mae and Freddie Mac that we all follow clearly states that we need to have all pages of the bank statements, right? Even if the 5th page shows no information, but your bank statements towards the bottom or on the very top will say page 1 of 5, 4 of 5, 5 of 5, right? So the 5 of 5 may be blank, but it says 5 of 5. We don't know what information is on it.
and it might not be blank.
It may not be blank, right?
Right.
It could be, there may be some other information listed there. So we have to get all pages of the bank statements so we can verify everything that we need to verify.
So when you're looking at someone's bank statement and you see every month I've got $5,000, I've got $10,000 going in, but 2 weeks ago I had $50,000 go in because mom and dad are going to help me with this down payment.
Sure.
Right. What happens then? Does that raise flags or eyebrows or?
It always will, and my goal always is to, when I'm pre-qualifying or pre-approving somebody up front, I'm asking them, are you getting any gift funds for the down payment or closing costs, right? So if I know they are getting some funds, then I'll give them instructions on how to document that, because any large deposit that goes in that is unrelated to your payroll, we have to document. We have to source, because that is required by Patriot Act. We want to make sure that funds that are coming are reliable funds that are being used for the appropriate transaction. So it's if I neglect to get the documentation for any large deposit, it could become an unsellable loan. So we have to verify all that information. But everything starts from the initial conversation that I have with the client to understand what's really going to happen. Are they going to get any kind of large deposit from the family members? Or did they recently left a job and they closed out their 401k and they liquidated everything and transferred money? Or have they applied for a 401k loan already and they've gotten some distribution? So the more information I get up front, the better I can prepare them for what type of documentation they would need to provide us.
And of course, the government is looking at this from a completely different perspective, because they're trying to stop money laundering, because real estate is a great way to do money laundering. So it's important to understand what the requester has in mind, that is the government or the person who's ultimately going to be buying this, versus you, who's a totally honest person. I got some money from my 401k, I got some money from my uncle. My dad, my grandmother just passed, and so I've got some distribution from her will, from her estate, and I'm putting all of that together and going to buy a house. Now I've got 20% down, where, you know, a year ago I only had 3% down. So that's the big change.
Yep, so everything is documented that is listed on the bank statements. And we also want to verify that the paychecks that we're seeing matches with what's going in the bank account, because if we see the direct deposit coming into the bank statement, what's the need of getting a paycheck? Right? So we have to cross-reference to make sure, is that paycheck being deposited, net amount matches with the paycheck? And does the paycheck have the right types of deductions? Does the paycheck matches the year-to-date income that is represented on their salary? So we have to analyze and make sure that everything is done according to the books.
So all of that is going on behind the scenes.
Absolutely.
Part of what I said, there's a lot going on that you're probably not even going to be aware of or know who's doing it.
Correct, and hence the reason why you need a few sets of eyes, right? Mine, my processors, underwriters. Because if I miss something, my processor would catch it. If she misses something, the underwriter would catch it, and vice versa.
Well, so this sounds very complicated and detailed, but for a specific reason.
Yes, there's a reason behind it. Honestly, I would say anybody who's looking to purchase a house and they're talking to their lender, set up that consultation up front. I know it's easy for people to just go online and apply, and there's so much you can really learn from an application, right? But a lot can be learned from an initial conversation.
So, Amit, thank you very much.
You're welcome.
I appreciate your time and your attention. I appreciate your sharing your knowledge. Look forward to working with you.
Yep, this is wonderful. Thank you for having me again. I look forward to the next invitation. Great.
Thanks a lot.
Thanks, Gary.
Yogi says goodbye. He is, by the way, the hardest working dog in real estate.